as far as the macro setup is concerned. Mangalam, over to you for our next guest.
Yep, we do have with us, a fundamental market expert joining in. We have George Joseph from Ask Equity, CEO Equity at Ask Investment Managers, who joins in to discuss the way the market's set up right now. George, we thought that maybe the worst of the war is behind us. And from a price standpoint, yes, it is. But it seems like the worst of volatility isn't behind us, the uncertainty. We're still not very sure of where this goes from here on. Oil prices from levels of $72 per barrel, as low as that, have bounced all the way up to $92 per barrel. What is the investment scenario looking like as per, what, the geopolitical scenario is? Earnings haven't particularly been bad so far, but a few of them have not actually done well either.
Yeah, absolutely right. If I look at from my fund manager career perspective, the last 25 years where I've been associated with the fund markets, I seriously think this is one of the most exciting times that every day new news flows, and especially driven by the US president's tweets and messages, markets dilly-dallying. This kind of scenario I've never come across in the past. And this is very, very unique and it's very interesting. So how this will pan out is anybody's guess. But if you look at from the fundamental perspective, India macro is fairly robust compared to 2013 levels, where the twin deficit was high, dollar was appreciating significantly, and also we had the current account deficit, and as well as the inflation on a significantly higher trajectory. So whereas today it's exactly the opposite, inflation is benign to a certain extent, and even after 85% move in crude oil price last 3-4 months, and then cooling off. So we have not seen that much of impact in the macro, and that is the beauty of India at this point in time compared to what it was earlier. So macro perspective, we have significantly improved compared to what was more fragile in 2011 to 13 period, where the taper tantrum and all was going on. And when you look at from the fundamental growth perspective, the capex-led growth is clearly visible. Corporate capex is growing. Listed companies of top 500 companies, the corporate capex is growing. It's roughly around 12 trillion rupees, and government capex is around 12 trillion rupees, and state government capex around 8 trillion rupees. So it is growing at a decent pace. So we are in a new cycle starting 2020. It's a capex-driven cycle in some shape or form, not like the way it was in 2006-7, where China was growing at 10% and India was growing 8-9%. It is half the growth of China right now, and India growing at 6-7%. So it's a very different level of expectation we need to build. But at the same time, we are in that regime of cyclical rally taking place, and that started in 2020. We are still on. Market volatility, as you rightly mentioned, it is significantly higher than what it used to be, and we have to live with this kind of situation. But looking at fundamentals, is there any spotting opportunities possible? The answer is yes. Banks and financials as a space is looking very attractive, and various other sectors like that.
George, the sector of the morning has been pharma, with the latest announcements that have come in from President Trump on the generic pharma tariffs over the 2-year timeline that he has laid out. Do you see this as on the flip side of things, do you see that the generic pharma companies now get more clarity on what they have to do over the next couple of years, and by the time the 200% tariff is supposed to take effect, President Trump's term would almost be coming to an end? So how do you view this fall that you have seen today in the pharma names? Do you view this as a buying opportunity for the longer term?
Definitely, yes. These companies have proven their mettle over the last 20-30 years. It is not like, it's a one-day game. It has been there, proven in the global landscape, and not only in US, in Europe, and other markets as well. So Indian companies are capable to handle these kind of situations. But having said that, 100%, 200% tariff, is not practically possible. Looking at the volumes that India supplies to US, the day you say that the tariffs are going to be significantly high, many drugs will be out of the market, and which will put, US patients, many patients under pressure, right? So if you look at the antidepressant pills, you look at the diabetic pills and, various other pills, which US consumers are having, and majority of it, the volume that India supplies is like massive. And, one of the companies in India itself supplies almost 10% of the entire volume in the US, generic volume. It's like a different scale at which India operates. So it is not easy for US also to curtail the supplies and, live with a very low cost regime. So to my mind, these are all noise. We need to look into the details and see that maybe some cost of compliance will go up, some sort of a baseline shift of manufacturing to US, maybe 10-20%, companies have to think about, so which will add to some sort of margin impact. But overall, US market is going to be very lucrative for Indian pharma companies from a long-term perspective. So still companies will deliver good growth and, margins in US, and the companies who are positioned there well in advance and, have proven their mettle over a period of time will succeed. So I am very, very positive on pharma, and this looks like an opportunity. Any dip is an opportunity to buy into these things.
All right, two-word answer. What two other sectors are you, bullish on right now?
So if you look at what we think is that, the cyclical sectors like banks and financials, as I mentioned, is one of the cheaper sector. IT is coming out of the lull period again. It is a global cyclical sector which is coming out of the lull period of the news on Anthropic and, the AI, and, so it looks like a very good services-oriented business which is available cheap, which looks like attractive to me. If you look at the capital goods and engineering, which is exposed to the data center manufacturing arena, and you look at the way even the two-wheeler exports, the numbers which is stacking up from the Indian companies, it's all looking very, very attractive. So exports as a basket, manufacturing exports or import substitution, be it in defense or other sectors, it looks like, very interesting play. So manufacturing, engineering, capital goods sectors, looks robust as well. So we are like the entire cyclical basket, to be frank.
Pleasure having you today, George. Thank you for sparing time and joining us. Looking forward to the next interaction. Take a short break. The management of India Mart on the other side in our Earnings Central. Stay tuned.